So hi, everyone. We're going to start this meeting today. So first, welcome to this fourth edition of the University Series organized by FinTech Cadence in collaboration with a few university clubs. My name is Karina Riviello. I will be your host for today. Today, we have the chance of organizing this with Net Impact team and Desautels Graduate Finance Club. So I'd like to invite them just for a quick word. So maybe Karin, if you can join and unmute yourself.
Sure. Thanks, Karina. It is my pleasure to be a part of this interesting session as the president of Net Impact Chapter. I'm also joined in the executive team by Hannah and Yahya. The three of us come from very different backgrounds, but we do share our passion for impact. This session is aligned with our focus this year, which is to engage in discussion with social-minded companies, to educate our members about the skills these companies are seeking, and to act on impact topics. Feel free to connect with us for future updates on our LinkedIn page or to buy directly with us. I'll now pass it on to Arjun to introduce the Desautels Finance Graduate Club.
Hello, this is Arjun Kapoor. I represent the Desautels Graduate Finance Club, and I'm helping out with this event. We also host events to enhance the industry knowledge and skills of our members and maintain active partnerships with other student groups like Net Impact. So I'm happy to be here today and to collaborate on future events. Our next event is on Friday. It's a conversation with a wealth management professional. Please feel free to reach us on LinkedIn or email. And thanks for having us, Karina.
Thank you so much, guys. So I'm from FinTech Cadence, and I'd like to maybe introduce you quickly who we are if you have no idea who we are. So we are a nonprofit organization who's been around for about 4 years, and our main mission is really to help create the future fintech leaders of tomorrow. We do this through our 3 pillars. First, we do a lot of events around education to help the community, especially the student community, to learn more about the fintech sector. Of course, we work in collaboration with different stakeholders from this ecosystem. So we work hand in hand with a lot of financial institutions, regulatory bodies, and other partners we have through the community, of course, startups being some partners as well. And of course, we support them through our different programs, and we help create new entrepreneurs in the fintech sector. We do this through many programs. We have many flagship programs that you can see right here. Of course, the certificate is our first program that we've launched a few years ago. It is a fintech certification around the different topics of fintech. The course is built with other financial partners, so it's really up to date with the industry. If you are interested in learning more and fast track into the fintech sector, we highly recommend you follow our fintech certificate. We do it twice a year. We're finishing the winter edition, but we have the French edition coming up at the end of the year. Of course, we are also an incubator. So we do have our Ascension Program. The Ascension Program is a cohort this year of 15 startups. It is our 4th edition. And through the 3 months of the program, we help these startups validate their products through different experts and mentors. If you are interested in learning and discovering who will be the new fintechs of the Canadian ecosystem, I highly recommend you attend our demo day that's coming up on April 29th. If you want more information, we'll be sharing it on our social media pages. So if you're not already following us on LinkedIn or Facebook, I highly recommend you do so. And of course, we also have our Formaton, which is a pre-incubation program. For any students who are listening today, if you're interested in launching your own business or just having your first entrepreneurial experience, I really recommend you do the Formaton. It is a 3-week open innovation competition. It will be happening this year from the 26th of May to June 17. We have many challenges that are launched by our different partners. And we already have the first challenge out. If you want more info, you can go on our website. We'll have also an info session on the 12th of May if you want more info on that and are willing to know more about it. Also, unfortunately, my slide is not up to date. We have another program. It's another incubation program around financial health. It's called IFH Lab. It's another program around startups who are really specific to the financial health sector. The cohort applications are now open. So if you know anybody who is a startup in financial health, you have until Friday to register. It's really coming soon. So don't miss it out. And you can go on our webpage and or go on our LinkedIn. We have announced it a couple of times. We do also, We do also have a couple of events that we do across the year. FinTech Drinks is one of our most famous one. It's a networking event with other ecosystem players in the FinTech sector. If you want to connect and network with other professionals like yourself, we have one coming up on the March 31st around the future is FinTech. Really highly recommend you guys be there. Hopefully we'll see a few familiar faces. It's a really exciting event that we have about 5 times a year. FinTech Career Fair, you guys, I think, are all familiar with what a career fair is. Unfortunately, this year we have put it on hold for now because of COVID reasons, but hopefully, if we're all very optimistic, we can have a new career fair by the end of the year. And finally, university series. I think if you're on the call, you are at a university series, so you are maybe aware of what we are doing. University series are short events around different trending topics in the fintech sector to help students get more familiar with what fintech is and how they can get involved in the fintech community. So I know we have a very diverse group that are here today. I wanted to make sure that everybody was on the same page. We do have a few students, we do have some professionals. So let's have a quick conversation and a quick overview of what responsible investments are. First, I mean, we often hear the term responsible investments, but we'll also hear sustainable investments. We'll also hear ESGs. These are kind of interchangeable terms, if I can say. And before talking about the how, I wanted to talk about the why we want to make irresponsible investments. First, well, when we talk about investments, we talk about money, and money is power. And if we want to have social change, I think to accelerate or decelerate certain sectors, investment has a great power over what will be the products and sectors of the future. So that is one of the main reasons why people are more and more interested in knowing how they can have impact on these future sectors. When we're talking about ESG, we're hearing it more and more, and a lot of people tend to think it's a very, very recent trend. But if we look through time, I mean, this is a very interesting timeline I found on Investopedia. They kind of track different times in the past where we've seen responsible investment kind of have an impact on changes. And it's very interesting because they actually tracked it way far back as to 609 before Christ and even further off. A few examples they had was with riba in the Islamic State, where they'd have these sort of sin stocks where they would recommend or prohibit their members of investing in certain types of stocks. We've seen this with a Christian religion also through time, where they would recommend their members not to invest into what we call alcohol or tobacco investments or even adult entertainment. We've seen it in the 18th century also with Methodism, where slave trade investments were prohibited to their members. Again, Vietnam War, a lot of universities got together. Students were actively demanding that the student funds were divesting from anything that had to do with worship. And in this a bit through the 1900s, also with apartheid was happening in South Africa, a lot of university students and other people, investment funds were removing their stocks from any companies that were South African. And we've seen how these different ways of investing actually changed the money, where it went and how it was used. So there are different ways to see how we make responsible investments. One that we often hear of is ESG. The ESG framework really relies around environment, social, and government, and it's really the idea of creating these criteria around these three fields. Sorry, I'm lacking saliva, so I needed a bit of water. So when we're talking about environment, these criteria can vary. Examples are looking at the carbon emissions of the investments you're making, how they have energy efficiencies, are they having an impact on the degradation of our habitats or biodiversity. Of course, when we're talking more about social, it's more about around human health. Are these companies having any effects on health or safety? Are these companies ethically have workers have ethical conditions? Are these companies having child labor? And when we're talking about governance, when we're talking about the business ethics, is the board independent? How is the board composed? Is there any diversity? This is a subject that's more and more common around these criteria. So this is kind of the ESG framework. these investments fund that are creating these ESG framework are kind of each doing their own thing. So these criteria do vary from investment fund to another. And one of the main, let's say, problem that people are issuing is that these frameworks have no common ground, which can be troubling, because if ever you are environmentally conscious and you want to invest in these ESG portfolios, you might realize that these values are not necessarily aligned with yours, which might confuse you. But there are other investment strategy. This is not a complete list, of course. When we talk about other investment strategy, we think about positive screening or negative screening. Of course, positive screening would be making investments in companies that you believe have a positive social impact. Negative screening, of course, being the opposite, also excluding securities based on certain criteria, mainly around environment and social criteria. And of course, divestment is another type of exclusion of these types of stocks. When you example in time, you see that this stock or this company doesn't align with your values anymore, or has it's a change in the world. Other types of investment that we're talking more and more about is impact investments. So we're not just talking about investing into companies that won't necessarily have a return, but in this case, we're looking at companies that do have an interesting financial return. Of course, when we're talking about a bigger financial return, we're also talking about riskier stocks. One of the trends we've seen recently is more and more people investing into startup ventures, example, clean techs, because it was aligned with both their social missions and a possible financial return. What's interesting is this investment industry is kind of changing with time. In the 2008, we had this big boom of new fintechs coming around, and more of these solo investors, I would say, are using these applications like Wealthsimple, Robinhood, etc., to make their own investments. And millennials and Gen Zs are more and more into these technologies than ever. It's also interesting to see that these new generations are more and more discussing around investments on different sort of platforms. We've seen it recently. A lot are getting together on Reddit, a lot are getting together on Discord. And because this massive movement is being made into these generations, we've actually seen like big piece with example GameStop and example the cryptocurrencies that are going up. So it's fun to see how these new generation are getting more and more involved in this. But also another factor that we have to keep in mind is newer generations are also very involved into anything that has to do with the environment. I think that being a millennial myself, I'm more and more concerned about climate change, and all the companies that do have an impact on these environment and social issues are at the heart of the preoccupations of newer generations. So it will be fun to see how these newer generations will possibly have an impact in the investment scene by making decisions towards ESG and other impact-focused investments. One example I wanted to give quickly, because we do have a lot of students from McGill attending, is the divestment at McGill movement that we've seen recently. So if you're not aware of this movement, McGill, like many other universities, has an endowment fund of $1.67 billion. At least that was the number that was given in 2019. And they have an investment policy that states that the only organization body that can divest or invest or at least do recommendations around the investments is the CAMSR. So a lot of the students in the past years have asked McGill to remove their investments in fossil fuels through their endowment fund. And the CMSR has refused twice already to do so. So Divest McGill was put together a few years back. It is a student-led organization to really push towards divestments of fossil fuel. So it's interesting to see how, again, new generations are getting involved into the divestment area or into the investment scene. And of course, there are some reasons why people might want to keep a fossil fuel into their investment portfolio, even if they are into ESG criteria. But I am no expert in the ESG field because my background is another one. But I have the chance of having today with me two amazing speakers to maybe discuss this a bit further and maybe deep dive into this subject. So I'd like to welcome Nawar Al-Sadi and Amar Adas. If you guys can maybe unmute yourself and join me on the stage.
Hi, Karina.
Yes.
Thank you. Yeah, thank you, Karina, and great presentation of responsible investing in 5 minutes.
Yes, a quick run through, right? So thank you so much, you guys, for being here. So Nawar, I know you are a sustainable investment professional for over a few years now. You're also the founder of Semper Augustus Capital, crazy activist in the investment scene, very ESG focused, of course. And Professor Amar, you are adjunct professor at GMSB from Concordia. I know you've also taught at McGill, at Sherbrooke. You are everywhere, at Queens also, if I'm not mistaken. And you're also director of the Van Berkom Investment Management Program. So you guys, I think you have amazing backgrounds. So happy to have you both.
Thank you.
Thank you for being here.
Thank you.
So to start off a quick question, I wanted to see, oh, by the way, I like to maybe quickly do a word for the whole, everyone who's attending right now. If you guys have any questions, I really want to take them. So send them over in the chat and we can ask them. You don't need to unmute necessarily. I will be able to ask them to our speakers. So we want to make this as interactive as possible. So feel free to send your questions over if you have any during the conversation. We'll have a Q&A also at the end. So just to start off with a quick question, we're seeing right now a big trend publicly in these companies that are gearing more and more towards ESG. And a lot of industries want to be more active in their role. I want to ask you a question quickly is, do you believe that this is a genuine conversation they're having?
I guess I'll start. I will say that for a lot of these companies, it's not a choice. In order for a lot of these companies to remain relevant, for their business to have a future, they do need to follow a more sustainable business model. I will give you, for example, the auto manufacturers. The auto industry itself right now is going through a transition to electric transportation. And a lot of these auto manufacturers have no choice but to get into this new technology, because otherwise they will be regulated out of existence, and consumers will not purchase their products. So there are a lot of industries that find themselves obliged to revise their business model in a way that makes it sustainable for two reasons. One is this is what consumers are asking for, and second, this is what regulators are forcing them to do.
Yeah, I think that's well said, Nawar. And you know, it's really complicated. I think anybody that looks at sustainability in general and sustainable investing policies has to understand the complexity underlying the changes that we see, in particular in the investment industry, right? So a lot of companies are turning towards becoming more sustainable because of pressure, like Nawar said, from both from regulators, from consumers, from customers, from employees in many cases, and to a large extent from investors, right? So that raises a couple of questions. One is, are those policy changes genuine, or is it what we call greenwashing, right? Where some companies could be opportunistic and claim to be doing certain things, tick a few boxes, but in practice, it's not. It's very superficial, right? So I think that's one thing we have to really scrutinize and understand well. And the second point I would say is that, Karina, you presented the history, going back hundreds of years, in this movement. And what we really have to understand is that what is happening now in the industry actually has little to do with that past. It's driven by an understanding among investors, an emerging understanding that's widespread by now, that ESG issues are investment issues, right? This is about risk and opportunity. It's not about investors, wanting to save the world or necessarily wanting to do the right thing. It's about them understanding that those factors, the environmental, social, and governance factors, are material issues and are investment issues, like I said, and they can't afford to ignore them.
Mm-hmm. So what I hear from you is both of you, is that a lot of these companies are moving towards what their clients want. is the fact that they're moving also towards more ESG criteria. Is it something that is also affecting, or does it have a positive trend into the investing sector also, like the other way around?
Well, I'm sure Amr has a bit to say about this, but there's certainly a lot of academic research and empirical research that shows a correlation between ESG factors and better investment performance, both accounting performance and sustainability performance. And as this knowledge become more widespread, investing in sustainable companies, it's not only a risk mitigation measure, but also becomes a way to generate alpha. There's a statistic and a research I always cite when it comes, for example, to active ownership around ESG issues. When investors push companies to do the right thing, there was a research that was led by the University of Cambridge of 2,100 engagements, ESG engagements over a 10-year period. And it did show that companies that engagement that lead to companies changing their sustainability behavior leads to 7.1% excess return over the next 12 months. So, and there's a lot of research of this nature. So obviously there is this growing understanding that there is a relevancy to the investment world. Exactly as Amr mentioned as well, it's also a question of this is what you need to do now out of necessity, because there is a risk and also there are opportunities. And that's certainly a welcome development, because for a long time, a responsible investment to some extent was looked at as a cost. Now it's being looked at as an opportunity, and also as a way to manage risk more effectively.
Yeah, that's I couldn't agree more. It's essentially, again, investors are looking at ESG issues because they are material, and the word material, from an investor's perspective, pertains to a factor potentially having an impact on the company's performance, profit, ability to generate profit. And so that's why they're looking at ESG issues, right? So yes, there's unquestionable evidence that taking those factors into account results in better performance and less risk. And the opposite is the case as well. If you look at the performance of fossil fuel stocks, energy stocks over the last decade or so, it's been horrible, the worst performing sector by far, right? And yes, they've recovered a bit in the last few weeks, a couple of months, but still, if you look over a typical investment horizon, there's still very dismal performance. And of course, the prospects going forward, unfortunately, are not very bright either. So taking into account ESG factors is simply about smart strategic investing.
Super exciting. Yeah, it's exciting to see these trends happening in real time, right? Talking about these trends happening in real time, I wonder, like, factors that do change these or do have like sort of push into the investing world, when these policies are actually translating into better environmental practices, or when governments are actually also pushing policies towards environment. Do we see these push? For example, like recently we've had government Trudeau, he changed the name for Minister of Environment to Minister of Environment and Climate Change. It was, I think, a big statement doing so. Did we see the industry follow that? Was it like a quick trend?
I think that the change of name was probably a dig at the previous government as well, because they were known to forbid scientists from using the word climate change, which is bizarre and inexplicable and self-defeating in so many ways. So yeah, I think that was kind of a response that makes sense from a political standpoint. Look, I think that the industry is far ahead of policymakers when it comes to this, right? For some reason, especially climate has been politicized in North America. Well, not for some reason, it's because of the lobbying of oil and gas companies. It's not the case in most other places around the world. It's not a political issue. It's an obvious issue of planetary health and our ability to continue to live on this planet as a species going forward. So it is politicized here. But the industry is not driven by politics. Investors are, typically driven mostly by rational assessments. And so I would say not that the industry has followed, it's more that the industry has led. And the government is now catching up, right? I mean, we see the government yesterday announcing the plan to table a budget next month, and at the federal level, right? And I think that's that budget is widely expected to have in it policies towards green investments and infrastructure spending that's sustainable. So we'll see. But yeah, I think that what we're seeing happen today is just simply government following where industry has led for the last few years.
That's interesting. Like we often think the opposite way, but it's not. It's the other way around. I don't know if you want to add to that. Yeah.
Sorry, yeah, just quickly on that, just a couple of points. I think when it comes to policy around sustainability issues, we really have to think in a universal sense. So what Canada does by itself doesn't necessarily move the needle. It is what's going on around the globe. That's why, for example, the Paris climate change deal, for it to work, we all need to move in the same direction, because we exist in a globalized economy, and you can't operate at a different speed in certain markets because you disadvantage your industry. So coordination in terms of policy making is, I think, is crucial. And I would maybe slightly disagree with Amer on the fact that I think in Europe policy has been effective in leading the industry to move faster in terms of disclosure, in terms of integrating ESG factors. I think it's a bit of an interplay. The industry moves in a certain direction and policy gives it momentum. And then at times policy takes the initiative and the industry builds on that. So I do think policy has a place, but it has to be coordinated on a universal, in a universal sense, and not just a regional in a sense.
Yeah, I agree with you, Nawar. I wasn't referring to policymakers globally. Certainly, Europe has taken the lead. That's very clear. I was talking specifically about Canada, and to some extent Americans as well.
Thank you for that super insight. And talking about Canada, we actually have a question from the public asking, can we ask the panelists about the Canadian ESG market, its size, audience, future prospects? I don't know if you guys want to add to that.
Sure.
Maybe. Yes.
Well, that's actually a harder question to answer than it seems, right? It's not a straightforward answer. It depends who you ask, I guess, and what you measure. So anybody here can easily look up the RIA report. It's Responsible Investment Association of Canada, which is the main group that is a source of information on these issues. And so in their latest report, they say that responsible investments in Canada have reached $3.2 trillion, and that represents over 60% of assets under management. I'm not sure I would be comfortable to say that this necessarily means that every single dollar defined as such is actually managed in a sustainable way. I think to me, it means that this encompasses a whole range of incorporations of sustainable policies in investment, starting from the tick box approach, right, where you say, yes, 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 and that's it, to full, true, credible integration of ESG factors. So I guess the question depends on what your definition is of the size of the market. But the one thing that is obvious and indisputable is the growth of the market and the growth of capital flowing into more sustainable investments. I think that's clear to everybody that this is what's happening, and also that it's harder to get away with claiming to invest in a sustainable way when you're not, right? So it's harder to greenwash essentially, and also we're on the verge of making it even harder as we see the release of disclosure requirements and things like taxonomy, definition of what is sustainable and what is not. So in the coming months, we're expected to see all these things roll out.
Super interesting.
Just to put that number in context, that the 3.2 trillion, the size of the Canadian economy is 1.7 trillion. So we're talking financial assets that are supposedly aligned with responsible investments are twice the size of the Canadian economy. This is a huge number. I do agree not all of it is maybe purely can be defined exactly as responsible, but directionally that's 48% growth over the last 2 years. So the momentum is certainly there.
Super interesting. Talking about the Canadian economy, I think I have a few questions around oil and gas companies. I think it's a big part of our economy, unfortunately. When we're talking about ESGs, oftentimes we do see that in environment, a lot of FIs or other investment funds keep fossil fuels in these portfolios. Can you just give a quick insight on why this is and why they would want to keep fossil fuels? Maybe start with you.
Nawar, go ahead. You can
Sure. Well, I mean, basically because ESG is by its nature is 3 pillars: environmental, social, and governance. So when you rate companies, you're rating them not just purely on their environmental performance, and that's where climate change usually is captured. You're also rating them on their social performance, on their governance structure. So it is often the case that these companies who understand that they have a problem on the environmental side, they may compensate by taking the extra mile on the social and governance side. You see that often with tobacco companies. They publish 200 pages sustainability reports. If you look at Philip Morris, for example, sustainability report, they do great things about everything, except when it comes to their main product, which is, they say they want to migrate it to a healthier product, but they do have an issue. So they do invest in the other factors that ups their rating. And that's why it's important when you, for example, invest in an ESG fund, for you to understand whether this is giving equal weighting to the 3 ESG factors. Is it focusing purely on climate or environment or social? Because these other issues do matter. I mean, it's not enough to be a climate leader. I give you Tesla, for example. Tesla is often mentioned as a climate leader, but their social policy are horrendous vis-a-vis their employees. They refuse unions. They force them to come to work during COVID. There are issues there. So we can't just give them a pass because they're doing something on climate. So I think these things need to be balanced out. And when you invest in these funds, you have to understand the interplay between these factors.
Yeah, great answer. Look, again, I'm going to go back to something I said earlier. It's complicated, right? And we have an economy that is, by its nature, fossil fuel heavy and resource heavy, right? And I think the question, the way we should look at this is not, and I know I'm wading into controversy here by talking about divestment. I think divestment is just simply not enough, right? It's like there's a lot of there are a lot of calls, and there are a lot of commitments to divestment. At this point, well into the teen trillions, right? So I can't remember the latest number, but something like 15 or 16 trillion dollars of assets under management have been pledged to divest. Okay, fine, but if you divest from fossil fuel, have you decarbonized your portfolio? Have you completely removed carbon emissions? Of course not. And so I think we have to keep the big picture in mind, which is to align portfolios with the targets, which are the Paris Agreement targets. For at least that's kind of our guiding principle. Well below 2 degrees by the end of the century, and along the way, that will likely entail divestment or reduction of exposure to fossil fuels anyway. But the reality is, if we shut down all oil and gas extraction and coal manufacturing tomorrow, we don't have the infrastructure to switch to 100% renewable tomorrow, right? Or even next year or in 5 years. This is a transition that will have to take time, and as long as it's aligned with scientific targets, then we should follow that, right? And I think that's what a lot of investors are saying. That's what a lot of Canadian banks are saying in response to pressure and criticism that they continue to lend to fossil fuels. But as Nawar was saying, directionally, that's where we're heading, and there's more pressure on the banks to be careful with their lending. We're starting to see higher cost of capital, higher interest rates charged to fossil fuels compared to renewable projects. And so I think in the end, that's where we're heading. It's that logically and rationally, these are riskier investments and riskier lending, and so you have to price it accordingly. And as long as we price carbon, which we have finally started to do and appear to be heading towards doing more of going forward, so then the market will take care of essentially convincing those companies that they have to change their business models. And I'll reiterate what Nawar said, which is, if you look at the S aspect of it, those are companies in especially Western Canada that employ tens of thousands of people, right? So what's going to happen to those people if we all shun, Suncor and others and say, these are evil companies, don't touch them? Well, what happens to the people that work for them?
Yeah, definitely. That's a really good insight. And we have to always see the multidimension of all problems, right? I have another question of the public that kind of ties in well. And they're asking, how does the government help fossil fuel dominant companies, example, oil and coal companies, make a transition towards more renewable energy? I don't know if you want to start, Nawar.
Yeah, sure. Well, I mean, that's where the policy component comes in. Well, as Amar mentioned, it is a transition process, and it will take many years and potentially decades. So one of the things governments can do is really facilitate, for example, training for employees. Certainly giving these companies an incentive to invest in renewable energy in terms of their tax structure. It's not, in my judgment, it's not about attacking an industry or strangling an industry. It's about working with it, but in a firm manner to move in the right direction. Because there are thousands of lives at stake. 10% of the Canadian economy is tied directly to fossil fuels, and we can't just write this off. So government has a role to play because the industry itself may not have the capacity to operate at the speed or transition at the speed we want it to transition at. So that will be a collection of tax incentives, training, and as well as it's also about infrastructure in terms of giving both a regulatory infrastructure and an actual infrastructure for these companies to invest in projects that have low carbon. I think that what's going on in the fossil fuel transition, if you look at companies like BP, for example, and Total in Europe, the oil and gas companies in Europe are leading in the way they are moving toward a fossil fuel free world. That doesn't mean they are there yet, but they are ahead of the curve, and they could offer a blueprint for the industry here in terms of how they should move. Can they do more? Absolutely, they can do more. And I'd like to dial back to one point on divestment. I fully agree on Amar with this. Divestment, for me, it's a horrendous idea. Because if you walk away from the table, you have no voice. And I'd like to mention what happened at Exxon just recently. In December, Exxon was forced to come with a more ambitious transition plan, to invest $3 billion in renewable energy, to disclose Scope 3 emissions, as well as commit to lower emissions. And this was done through the leadership of a single hedge fund that owned 0.2% of the shares. If that fund did divest, then that maybe would not have happened. So I think dialogue with these companies, both from a shareholder perspective and government, can lead to better outcomes.
Yeah, excellent answer, Noor. I think you and I should be on panels together more often. You're completely saying exactly what I want to say, and I totally agree. I'll give you another example on that. What can government do? So yes, tax incentives is one. Potentially loan guarantees, or what are being called the transition bonds. So these are, essentially having the government step in to reduce the cost of borrowing for companies as long as they promise to use the funds they raise towards more sustainable activities. And if you look at a company like Suncor, right? So Suncor owns Petro-Canada, the petrol station, gasoline stations all around. These companies have large project management expertise, and for example, let's say, as we observe the economy transition to more electric vehicles, where are you going to charge your electric vehicle? In your garage overnight, fine. But, like if you're on the road and you need to charge, well, gas stations are an obvious, place to do it. So could the government give incentives to Suncor and others and Exxon, even with Esso stations, to build electric vehicle, the super fast chargers in those stations, to, given that they exist already as physical structures and people are used to driving in there to refuel, right? So why not drive in there to recharge And that's an example where government can give an incentive to build this kind of infrastructure.
Super great insight, and I think a lot of people are learning so much about about this with you guys. I want to kind of divert to another question, and kind of want to talk about tracking the impact. When we're talking about responsible investment, we know that tracking is one of the main biggest issues, whether it be AS or G. Can we talk a bit about the role that fintechs are playing, or how can technology help with this tracking? Do you guys have any input to share?
Well, I served as chief of product and strategy at FinTech for 4 months. And another reason why it's only 4 months. But anyways, during that period of time, I really looked deeply at that question of tracking. And I think FinTechs have a critical role to play for a couple of reasons. First, ESG is all about data. It's often unstructured data. So whether it's natural language processing or machine learning, AI, these tools are critical in terms of aggregating, structuring, and ultimately producing insights. Let's give you a very real example. One tool we did in my company where I worked that we were looking at was, for example, looking at LinkedIn data to track the employee composition at companies, and between males and females and minorities, and what's their evolution in terms of the leadership, whether they are being promoted or not. So certainly fintechs can play a big role in gathering this kind of data and in offering insights. And sometimes that insight is not just relevant to investors, is also relevant to the companies themselves. In the engagement space where I operate, where I developed what I call the extreme engagement engine, there's practically no innovation in the ESG engagement space. And that's really a critical area. And simple innovations, such as tracking real-time sustainability factors along the timeline of your engagement and whether you're making a difference or not, fintechs can play a role. I would say that the challenge fintechs have is that financial institutions are reluctant in terms of they don't want to migrate from their legacy systems to new models. And I think facilitating that discussion, it's important for a fintech to focus on how they are going to convince a big bank to give up on Excel and a spreadsheet and go to a new solution. Even though the solution might look interesting, they need to show that they could help with that migration in an efficient way. Because it's not just the technology, it's also about how you implement it at that institution. A lot of fintechs focus on, they have something insightful, but they don't link it back necessarily to an organization, 10,000 people spread around the world, and they have systems that work. So I think the innovation also needs to happen at the implementation phase.
Great insight.
Yeah.
Yes.
I agree. I just add that another area for technology is, there's an example of a Montreal-based company called Aquantix, which is, I'm sure you're aware of, Karina. And they provide solutions on water and assessing water risks and opportunities. And I think increasingly companies like that, satellite imagery of carbon emissions or methane specifically leaks, because those are hard to detect. I think this kind of technology and using big data to aggregate and create decision useful ESG data, because like Nawar said, the biggest challenge in this space really is the data.
Yeah, super exciting. We know Quantix very well. They're actually an alumni from Finicans. They're now called Black Swan Financial. So if ever you want to check them out, I think we'll link their website in the chat. Yeah, talking about fintechs, I have a question from Vinay asking, there are different definitions and stakeholders, but who do you really think is the center of all this discussion? Is this the common man, the retail investors who have more knowledge, or is it fintech who are doing some great work in ESG or related fields? Who's that main man?
That's a tough question. I don't know if I would say it's retail investors. I think retail investors are probably behind institutional investors when it comes to implementing the sustainable investing strategies. I'm not sure I would kind of narrow it down to a single entity. I mean, it's the center of the discussion Stakeholders. Okay, I mean, by definition, stakeholders, I'm reading the question now just so I can sort of try to understand what Vinay meant. I think it's everyone, right? I mean, this is what makes this so interesting is if you look at the ecosystem of sustainable investing broadly, or the financial system, it's made up of investors, it's made up of regulators, policymakers, institutional and retail investors, like I said, stock exchanges, data providers, central banks, right? And I think one of the reasons that this wave, I would say, of sustainable investing has been so dominant and has developed such momentum is because of the involvement of all those various stakeholders. It's not one pushing and the other lagging, especially now with government stepping up in Canada. I think I would look at the whole ecosystem rather than just say it's centered on a certain entity or person.
I would reference here the 2019 roundtable announcement that we're migrating toward a stakeholder capitalism, and as Amar said, it's everyone, and it's in this case consumers, employees, and investors. And that's so what's meant by that is that when you are running a company or a business enterprise of some sort, you have to take the interest of all these stakeholders into account when you are supposedly creating wealth. So you have to create wealth at the societal level, you have to create wealth for your employees and also for your investors. And there are certain countries where they are ahead. I mean, for example, in the Netherlands, they have a dual boards, two boards, and a board that kind of focuses more on the business and a board that focuses on the interest of multiple stakeholders, such as they have representative from labor unions and others. And that's important. And that's not important because this is the right thing to do. That's important because companies that do take care of the interest of all stakeholders remain relevant for the long term. And if you are, for example, investing for your retirement, you want to know that the company you're investing in will be around in 30 years or 40 years. And that's a very difficult thing to do in a world that is moving so fast. So one way to reduce the uncertainty is for you to manage your business with the interest of all stakeholders, because that does inform your capital allocation and reduces regulatory risk and unexpected events such as we've seen with COVID. Companies actually that were better in their ESG management were able to withstand this tsunami better than companies that did not have that kind of understanding.
Oh, that's interesting. It's always fun to see how these big changes in time, especially like COVID, does impact the world. And it's fun to see that ESG companies or companies that were very sensible to these subjects have more like have the tools to survive better. Yeah, when we're talking about looking further in time, and it's a hard process to kind of be a sort of wizard and see in the future, right? Talking about coming back to a bit like we were talking about the Canadian scenery earlier on, you guys were saying how policy is very different here and elsewhere. Quick question like this is, do you think in terms of responsible impact at this point in time, we are doing enough? And in terms of Canada, you were kind of mentioning that we were behind compared to the European market. Like how can we catch up if we're not doing enough?
Sorry. Well, I'd like to ask this question a different way. If you're not doing responsible investing, what are you doing? Irresponsible investing. Nobody wants to do irresponsible investing. Nobody wants to invest in companies that are destroying the environment or creating social inequalities. This understanding is becoming second nature to the newer generation of investors. And that's why responsible investing in Canada, as Amar mentioned, the REA numbers at 3.2 trillion, it is moving in the right direction. Obviously, we are in the early phases, so we don't agree on definitions. We don't know exactly what is responsible investing, what is ESG, what's not. That's fine. We are in the early phases. It took about 70, 80 years for financial accounting to be standardized. So it will take some time for these norms to be standardized. I think Canada is doing, for example, vis-a-vis the United States, I think Canada is doing well. And considering the nature of our economy, the extractive nature of our economy, we're doing a hard turn. For example, countries such as Australia is having a more difficult time internally in terms of moving in that direction, and they do have a lot of extractive industries as well. And so I think Canada it could be a leader in North America, and it is a leader in North America, and we have some great brands. I mean, for example, you look at a company like NEI Investments; they've been doing that for 30 years. They've been doing ethical investing before any one of us knew what ethical investing was. So we have great companies with a long history of doing ethical investing. We know how to do it. And we have a financial sector that's highly concentrated in Canada, which is both an issue at times, but in other times it could become a force for good if it all migrates at the same time toward responsible investment, which is, I believe, what is happening right now. So I think we are on the right track, and we can do more, but I'm happy in terms of what I'm seeing, what the discussion I'm having. In my capacity as ESG engagement advisor, I talk with a lot of asset managers who approach me to ask me how we can do this better. And I'm seeing this momentum, and I see no reason why this is going to slow down in the next couple of years.
Yep, I totally agree. I think, are we doing enough at this moment? No, but we're getting there, clearly, right? There's a lot of momentum, and it's a journey that I think we're heading in the right direction. Whether we've succeeded or not, I think will be clear in about 10 years.
Yeah, I'm really happy to know that at least Canada is on the right track. I think it's encouraging especially for generations who are looking at this and want to see more change. In terms of who's doing right, or do we have any one to look up to, or either it may be companies or other countries that are, I think, doing the best that they can be done?
Yeah, I mean, for companies that just mentioned companies such as NEI in Canada, but in terms of countries, I really love what Europe is doing, or the European Union is doing. I'll just give you one quick example. They recently passed a law in Europe, the right to repair. And we build a consumer economy where if your appliance breaks, you throw it and you buy another one. Your TV breaks, you throw it and you buy another one. And what they're trying to embed right now in regulation in Europe is that you need to build products that last for many years, and that consumers should have the choice to ask for a spare part and have their appliances or electronics repaired. So we're not wasting so much material building a product from A to Z because there's a small component that broke down. So for me, that kind of thinking at such a granular level is really key. So and then you have a host of other developments in Europe around shareholder rights, how they're forcing investors in the financial industry to engage and to report on outcomes. It's not just I talk to company X and Y and Z about sustainability and climate change. Also, they're forcing them to report on outcomes. What did they really achieve out of these discussions? And they're also forcing funds that claim to be responsible to explain how they are responsible. What are the criteria they are following? And they're forcing them to follow certain criteria. So I think we can look up to a model like this. And I think in Canada, we have such a rich mix of cultures and backgrounds. We are a country that is open to immigration. And we have, I think, in my opinion, Canada is the first international country. We are what diversity should be around the world. So we are leading on the social side, and I think we could lead on the environmental side. And ultimately, the whole world needs to move in that direction.
Yeah, great points. I think regulatory perspective, Europe definitely sets the standard. Some additional examples of leadership, I would say, in Canada include CDPQ, the Caisse de dépôt placement du Québec, which among asset owners globally, not just here, has set the standard in many ways and has led decarbonization pledges, increasing allocation to sustainable investments, reducing carbon footprint in their portfolios. They've been doing that longer than most asset owners. And on a smaller scale, I'll give a shameless plug to Concordia and as a foundation, and the commitments that were made to be 100% sustainable in all the foundation's assets by 2025. That's leadership that universities I think should aspire to follow.
Super exciting. looking forward to see where we go from there and how we evolve, and hopefully we'll keep in mind those good examples for our future too. I have a quick question from the public, from Abhishek, asking, do you think down the line definable ESG metrics would formulate around the UN as SDG goals, where the definition of each of these goals become more defined?
Actually, when I worked at the Mark Labs, I spent a lot of time converting the SDGs into ESG metrics. I converted the 1,000 SASB indicators into SDG metrics. And so I believe the SDGs are a wonderful blueprint to move forward with, because they do cover most of the issues. I mean, the vast majority, not all, but the vast majority of the issues, they frame them in a way that is accessible, and that is it's relevant. Even though they are designed for governments, there are ways to convert them into private sector goals. And to give you an idea, the PricewaterhouseCoopers mentioned that 79% of companies that report, that talk about sustainability, refer to the Sustainable Development Goals. And that was from a report in 2019. So I believe the Sustainable Development Goals are a good framework, because one issue that I think that's important is that there are a lot of sustainability priorities. And sometimes if you're a company, you may not have a clear idea, or if you are a financial institution, where you should focus your efforts. So the SDGs are telling you, this is what we need to do. You don't have to invent the wheel with every sustainability program. They're telling you need to focus on A and Z and Y, and when we need to go. So I think the SDGs, of course, there are others. I mean, you have the Paris climate deal, and you have the UN compact, and there are multiple sustainability agendas, but I think the SDGs is a great start, and I guess I'm a bit partial to it, because I worked with it for a long time.
Yeah, I think SDGs are a great way to align business strategy with one or more of the targets of the goals. But if the question pertains explicitly to sustainability or to ESG metrics, then I would look at the effort and the work being done right now by IFRS to develop sustainability accounting standards, essentially sustainability reporting standards, so that we can have comparable reports from different issuers, and so that we can stop seeing different ratings. Nawar mentioned Tesla earlier. It's some data providers put it at the top of the list of ESG rankings, others put it at the bottom of the list. And so what do you do if you're an investor and trying to assess whether Tesla is a sustainable company or not? So I think we need standardization, and there's a lot of work being done around that right now. So I think expect to see that in the near future.
At what level is this work being done, if I may ask?
It's being led by IFRS, which is the global accounting standards body, and with collaboration from the big four accounting firms, PwC, EY, Deloitte, and KPMG. And the World Economic Forum. So I think that's pretty wide spread or kind of global leadership. We'll see what comes out of it. There's no, it's still not clear if those are going to be standards that would be widely adopted globally or not, but at least the effort is there now.
Well, looking forward to see how this unfolds, right? We have another question from the public. We do have a lot of students in the crowd, right? So the question is from Nabila, and she asks, what can we do to prepare for a career in responsible investing?
Can I just jump in quickly, because I do have a meeting at 1, so I'm going to have to leave in a couple of minutes, but I think I'll give my answer quickly to this. You can look at the various certifications being offered from CFA Institute, announced one just earlier this week, and RIA has certifications. Concordia has SIPC, of course, which Nawar mentioned earlier, and he was submitted actually one of the best reports I've ever seen in that certification. So there are options for sure. There's SASB FSA credential that's available. So to prepare for career, I think in sustainable finance, I would look at obtaining one or more of those certifications.
Great. I won't keep you much more longer, Amar. I know you have a class right now or whatever other meeting, but thank you so much for being here. Thank you so much for all your great input. I'm sure everybody really found this very insightful for the future.
You're welcome. My pleasure. It's great to be here and great to share the panel with you, Nawar. I hope we can do this again as well.
It was a real pleasure. Thank you, Omar. Really a pleasure being with you on the panel and with everyone. Thank you so much.
All right, thanks. I have to go.
Now, I don't know if you wanted to add to the question for students who are looking to get involved.
Yeah, I mean, I do have a bit of time, so don't worry about rushing. But I do have. Yeah, I mean, what I would say is ESG education is really covers a large number of areas. So it's governance, social issues, it's environmental issues, and so I believe it's important if you want to go in that field for you to keep an eye on the three pillars. If you're overly specialized, you may not be able to capture the extent of all the ESG issues we're dealing with. So I think the certification that Amar mentioned are great, and I would advise doing really all of them. I mean, it's some of them will take a bit more than others, but a lot of them can be done online. They can be done at your own speed, and they build on each other. And so I think these certifications are great. I'm actually creating a certification myself on active engagement with education for sustainability in Montreal, which we're launching this summer. And because I believe active ownership is as well key. So it's not to promote my my certification, but I just feel that I felt there was a gap there. So, but there are a lot of great programs.
Thank you so much for that answer, Narayan. Thank you so much for being here. I don't want to keep you up too much. I know you have a busy schedule as well, but I'm pretty sure that everyone enjoyed the panel. So I don't know if you had a last word before leaving.
Well, I mean, I just would like to say that I really hope that in a few years, there will be no need for a panel like this. And what I mean is when we talk about investing, we shouldn't be talking about responsible investing and not responsible investing. It's everything has to be responsible investing. You can't invest irresponsibly anymore. So I feel that I'm really encouraged that we have a lot of people interested in this field because responsible investing and building a sustainable economy is in our collective interest. It's not about my interest or interest, and it's not about the short term. It's about building a future for generations to come. I believe there was a company called 7 Generations because every act they do is measured in terms of its impact over 7 generations. So that's the way we need to build our economy. And I think panels like this are very constructive. So thank you so much for inviting me and for the great questions. And hopefully that was helpful to everyone.
Definitely will. I can't wait for the YouTube link to be out to rewatch it.
Great.
Thank you, Nawar. Just a quick word before finishing the panel. I know that we have a lot of students and I wanted to talk to you quickly about our upcoming formaton because I know a lot of students who want to get involved into the fintech sector don't know necessarily where to start. And we think that formaton is a great start for that. So it's a 3-week open innovation competition. This year will be from the 26th of May to June 17th. There are 2 tracks you can register. You can register either alone or with a team. If you are alone, we will help you create a team. If you want to register, we have startup tracks where you really work to create your own business. If you're not ready to start your own business, but you still want to learn more about fintech, you can also register to the research track. We haven't announced all of our challenges yet, but the first one is out. It will be in collaboration with Payments Canada. If you want to have more information, you can go on our website and check all the information. There's a couple of more info on what the challenges and what the solutions can be. And of course, whoops, I forgot the most important part. Because it is a competition, there are also prizes to win. For each track, there is up to $5,000 to win per team. If you want more information, there's a little mistake on my slide, but if you want more information, there is an info session that will be on May 12th and not May 5th, still at 5 p.m. Registrations are also open, so feel free to register if you want more info on that. And of course, you can always follow us on our social media if you want more info. And like we mentioned in the chat, we do have a FinTech Drinks if you want to network with more people from the FinTech ecosystem. So thank you so much for being here today, guys. It was a pleasure to have you all on, and hopefully we'll see you in the next mini series.
Thank you so much. Bye, Karina. Bye, everyone.
Thank you.